and discussed it in the media and in Parliament that we are pursuing a very prudent fiscal consolidation roadmap, that we had to strike a balance between getting the fiscal deficit down to 3.6% and investing in infrastructure and other very necessary sectors. And it's that balance that I think that the RBI has appreciated, is that the fiscal consolidation roadmap remains in place, but at the same time the quality of government expenditure is good, and the fact that we've got an off-cycle rate cut from the RBI, of course, is very welcome for all citizens of India, because I think everybody is looking for a near-term boost to the economy, and I think with the rate cut coming as it does right now, does provide that near-term boost to the economy as well.
So you think the frequency of the rate cuts is going to go higher with so much confidence in the economy and the numbers now?
I think what is going to happen to the rate cycle moving forward is going to be driven by the data. I think the RBI has signaled that very clearly, and that's part of what we've also been saying. Again and again, I've said that the RBI is a very professional, data-driven organization, and as the data comes in and provides further room for easing rates, we are quite sure that that will happen. But again, you have to go back and look at what is actually happening to the numbers themselves. Obviously, we have now put in place a fiscal consolidation roadmap, a framework that we have made very clear, and now I think the data is going to determine what happens to the rate cycle moving forward.
For one thing, like now as for the new monetary policy framework, so government and the RBI are targeting a inflation target of say around 4% plus minus 2%. So going forward, how much scope do you see?
I think where we are right now with investor expectations and the market itself is that we have moved from a hope rally with the budget being a catalyst to a conviction rally. Just to put things in context, in the last year, the Nifty has gone up 50%. The Nifty has gone up 50%. And with the Nifty moving that much, to sustain that move and to create this trajectory where post the budget from Saturday, Monday, Tuesday and then today, the market has moved upwards despite it already having moved up 50%, gives you a sense of what the level of conviction is, both from foreign investors as well as domestic investors, about the soundness of our policies and the strength of the economy and where the economy is likely to be over the next 5 or 10 years. As I've said many times before, the goal of the budget, the goal of our economic policies is to be able to get the Indian economy to a sustainable, non-inflationary growth part of 7 to 8% in the long run for the next decade, 10, 15 years. Now, investors looking at that are very excited about what it means for wealth creation and for the prospects of all Indian companies and the kind of earnings lift that we are going to see. And I think once that has been absorbed by the market, which is what is happening over the last 2 or 3 days, we are in fact moving, as I said, from a hope rally to in fact a conviction rally that the earnings growth, that the opportunity for even some multiple expansion is certainly possible.
So just one quick point, the core data that has just come out in the current financial year, that is very subdued. Now CSO already has a growth estimate of 7.4% for the current fiscal, and we have now 8 to 8.5% for the next financial. So how close do you think we are actually going to achieve that? Because the data on the ground is still not reflecting it. So do you expect some kind of a time lag before things look better rather than the market being the benchmark?
Well, there are really 2 important near-term drivers for the economy, and one of them has been put in place just now. And the 2 very important near-term drivers for the economy are in fact a rate cut. Because obviously with interest rates coming down and banks following through and credit being available, we are in a situation where we see EMIs coming down significantly. With EMIs coming down significantly, if you have a housing loan, you have a car loan, you have a motorcycle loan, you're putting more money in the pockets of consumers. When you put more money in the pockets of consumers, consumption goes up, and as consumption goes up, obviously the economy has a real opportunity to get moving in the near term. So that's one very important aspect. The other very important aspect in the near term is what's happening with stalled projects. Now, the data that we are seeing suggests that many of these stalled projects are now getting unclogged. Obviously, land acquisition in some cases, 35–40% of the cases, is the real bottleneck, and of course, this government is doing what it can to get the land acquisition process streamlined. And then the third aspect of stalled projects is financing. And there, I have been guiding people to understand the enormous significance of the National Investment Trust that we are putting in place. We've explained many times, and I will explain once again to you, that in the National Investment Trust, we're going to put 20,000 crores a year. 20,000 crores a year, and once you put 20,000 crores a year there and we lever it up, you have somewhere between 60 to 100,000 crores of dry powder that will enable us to look at some of these stalled projects, to see how we can recapitalize them by putting in fresh equity and bringing in, as a result of that, new credit flowing into these stalled projects as well, many of which are sorely lacking in terms of financing. So by having the National Investment Trust as a way that we can get these stalled projects recapitalized, I think is another very near-term boost that we can provide the economy.
So the market were taken by surprise. Are you surprised by the rate cut?
Well, I think we have to obviously again go back to the data and see what the data is telling us. As I said in many of my interviews post the budget, if you look at where we are with respect to inflation and monetary easing, there are really three very important factors that are in place. Number one, if you look at inflationary expectations, those have collapsed. That was very clearly shown in the economic survey, number one. Number two, you look at the fiscal consolidation roadmap that we put in place, and there again, as I've said over and over again, it is not the number, whether it's 3.6, 3.7, 3.9 that's important, it's the quality of the fiscal consolidation. Are the revenue collection numbers from the government believable? Is the spending that we are doing on infrastructure high quality and results in growth and so on? And then number three, what is happening overall to commodity prices? With oil prices remaining subdued as they are, and certainly other commodities like iron ore and so on also being subdued, and in the commodity cycle being as weak as it is right now, the factors that would prompt any central bank to ease further were really in place. So I think that was quite clear to all of us. The other thing that you need to understand is that globally we are in the grip of deflationary forces. I was just at the G20 in Istanbul, where I had a chance to meet with a number of central bankers and finance ministers, and when you see the situation in Europe and you see the situation in Japan, the unprecedented quantitative easing that's going on as a result of that, it's quite clear that India is an outlier in terms of high rates relative to the rest of the world. So we have in fact a set of circumstances that would would sort of guide you to believe that there will be in fact easing on the monetary side.
And so do you ask one more question, sir. You said about the greater spending power among consumers. A smaller point here, this budget doesn't provide much in terms of to the small taxpayers. Can we expect something later in the month of May when you actually move the finance bill at that point in time?
I think we've been very thoughtful about middle-class taxpayers. As you know, there are very few taxpayers in India. There are only about 3.8 million taxpayers. Yeah, that's right, 3.8 million taxpayers in India. And with those few taxpayers here, the fact that we've already provided in July a major sort of boost in the slab and as the housing loan deduction is concerned, and then in this budget we provided further boost to long-term savings and so on. So as per our calculations, if you take full advantage of the exemptions on the housing loan side, on the medical side, on the savings side, you're in a situation where you can get to 7 lakhs without having to pay any taxes at all. We already have few taxpayers. This will probably mean we'll have fewer taxpayers, and the single biggest problem facing the Indian economy, I would say, and certainly the Indian government, is that our tax to GDP ratio is as low as it is. So we have limited room. We'll do the best we can. Obviously we want to make sure that we can provide as much relief to taxpayers as possible, but everybody in this country needs to understand that our tax to GDP ratio is quite low. Everybody wants a better quality of life. We want better infrastructure, we want better law and order, but to be able to do that, you have to equip the government to be able to provide those public goods that are sorely needed for India's growth and development. One final point that I would like to make is that if you look at a modern 21st century economy, an OECD economy for instance, the tax to GDP ratio there is 35%. 35%. In India, the tax to GDP ratio for state plus center is only 16%. So we are very, very ill-equipped right now to be able to deliver to our citizens the public service, the public goods that they need, and we've got to find collectively as citizens, as government, a way to broaden the tax net, to improve compliance, because as far as rates are concerned, we are quite reasonable from global standards. So it's not a question of rates. Our rates are reasonable.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.